What's up, guys? I want to ask you a question. How do you choose the best oscillator to trade with? And better yet, do you even use an oscillator and know what it is? Today, we are going to shine the light on Williams Percentage R. Go ahead and make sure that you are subscribed to our YouTube channel. Give this video a thumbs up and don't forget to ring on the notifications bell. Likewise, my friends, I do hope to see all of you on our social networks. My name is Angie. Let's get started. First of all, what is an oscillator? An oscillator is often referred to a sound or even data, as in our trading case, that moves back and forth between 2 points. In many cases, there is a midpoint that what seems like to be two extremes. Another good example that comes to my mind is a pendulum. Like in the song with Linkin Park, time is a valuable thing, watch the time fly as the pendulum swings, referring to the metal ball that swings between two extreme points and has an equilibrium point in the middle. Well, likewise, in many oscillators, you'll also see a midpoint as well as an upper and lower boundary. Oscillators are usually displayed below the price chart and help us identify areas where the price is overbought and oversold. Overbought means that the price may be too high to attract more buyers, and oversold means that the price may be too low to attract more sellers. The thing is that oscillators look and work in a similar manner. But what we have to understand is that different oscillators may work differently during different market conditions. So we have to consider, is the market trending? Is it moving in a certain direction? Is it like the price is steadily moving up, or the price is steadily falling? So we have a trend on the market. Or maybe the price is in a flat and moving sideways. Also, oscillators may react differently on different assets if we're trading different currency pairs, or if we're trading different stocks or commodities and crypto. So please consider these things when you are forming your trading strategy. Likewise, you do also want to pay attention to the time frame. For example, here we have an example with the MACD. The MACD works great during a trending market. You can spot awesome reversal points, especially if you combine the oscillator with the parabolic SAR and the EMA. My friends, check out this video for the MACD professional strategy. While the likewise popular RSI oscillator works great during a sideways movement where the price is traveling flat but in a range. So check out this tutorial so that you can master the relative strength index as well, my friends. Enjoy! Now, so my friends, what's so special about the Williams percentage R, and what kind of signals will it show us? Let's go ahead and turn the oscillator on. I want to show you a few parameters that you can change for your convenience. As always, the oscillator is in the indicators in the bottom left corner of the platform. Let's go ahead and turn it on in the oscillators. Williams percentage R. Here we are. So this is how it's going to be displayed by default. What you want to do is go ahead and click on this pencil. And here where it says centered, I like to choose the line. And also put a check right here on the upper and lower boundary. So now that it looks like the oscillator, whereas the default was the histogram. So what the oscillator was created by a gentleman named Larry Williams, who has over 60 years of trading experience. He is also the author of many trading books. He's a stock and commodity trader, as well as a politician from the state of Montana in the United States. And so the oscillator shows us where the last closing price is relative to the highest high over a specific period of time. By default, the period setting of Williams percentage R is 14. This means that if we are looking at the 1 day time frame, the calculation will consider the last 14 days. If you are looking at the 1 hour time frame, it's going to consider the last 14 hours. And if you're looking at the 5 minute time frame, the last 14 5-minute periods, which is a total of 70 minutes. Now I think let's go ahead and talk about some signals. Now, I already mentioned in the beginning of the video overbought and oversold areas. Well, Williams percentage R travels between 0 and minus 100. A reading above minus 20, this green line right here, a reading above minus 20, the asset is considered to be over bought, too expensive to attract more buyers, and if the line is below minus 80, this means that the asset is oversold. The thing about Williams percentage R is that even though the reading may be above minus 20 or below minus 80, this does not guarantee that the trend direction may be changing. For example, let's go ahead and look at we're looking at the New Zealand dollar and the Japanese yen. We're looking at the 30-minute time frame. And what I want to show you is right here. So basically what we have is an uptrend. We have a trend line. And if we're observing the oscillator, as you can see, the price does not, we are continually moving higher, but when during periods of retracement, the price moves below the minus 80 mark of the oscillator. And when the price is returning from the minus 80 reading up again, this may mean that the uptrend is resuming. And I have a likewise scenario here for you on a downtrend. During a correction, we may see the line cross the upper boundary of minus 20. And when the line is coming back down from minus 20 after the correction, may mean that the trend direction, the downtrend, is resuming. Therefore, Williams percentage R can help us get in on a profitable trade during a trending market. Now, I just want to stress one more time that an overbought and oversold reading on the indicator does not mean a reversal will occur, especially overbought readings. Let me go ahead and just scroll back in history a little bit. I do have a little example for you. Right here on May 27th. We have an uptrend right here. We have a clear uptrend, but we can actually see that the price always remains here above the minus 20 area. So continually in the overbought area. This is because an uptrend should regularly see prices that are pushing to and past prior highs, which is actually the base of this indicator's calculation. So during a strong or a steady trend, you can actually look for corrections or bounces on the oscillator from the 50 mark, as we can see right here. Now let's talk about another signal that we can receive from this oscillator and actually from oscillators in general. This is called divergence. Divergence means that two things are moving in the opposite directions. In our case, we are going to look for a divergence between the price chart and the direction of the oscillator. If you see that the price is rising, you see a green candle, but the oscillator is actually already heading down, this means that buyers are losing momentum. They are losing strength. And the same scenario we have during a downtrend. If you see that the prices are falling, you see a red bearish candle while the oscillator is rising, then sellers are losing momentum. Therefore, you do want to pay attention during such times because the trend direction may be approaching, and you do want to look more towards the direction that the oscillator is pointing in. My friends, I just want to mention that oscillators do not work 100% of the time. Don't forget to use technical analysis indicators and levels of support and resistance to get a confirmation. Whenever you are forming your trading plan and your trading strategy, aim for your trades to yield at least 60% profitability. My friends, please don't forget to subscribe, give this video a like, and be in the loop, ring on the notifications bell, and visit our social networks. Thank you so much for watching, and I will see you next time. Bye-bye.